Hello, this is the Chart Profit video, Friday 5th of May, less than an hour into the trading day. Looking here at the pre-open graphic, looking at the E-mini S&P, been in a tight range for a number of days. One interesting level is this dashed line down here at 2380, which is the value area low of the 1 month distribution as described here on Wednesday pre-open. I said at that point that if the E-mini still has an upward bias, I would expect a test down into this level to be rejected. Price acceptance of this level, 2380, would be a minor negative. And you can see the value areas each day printed above that point, and probes below have come back pretty quickly. The point of control of that 1 month distribution is here, 2385. Seems to be an attractive level, or still continues to be an attractive level for the E-mini. It's quite comfortable printing at that point of value. If we mark significant buying above that point, that would indicate higher. That would be a good positive, I think. This is a current chart on a 5-minute of the E-mini June contract. Last few hours printed above that point. This is 2385, that minor point of control, 1 month point of control. Currently we're printing time up here on the minor time frame above that level, 2380, the value very low. Down here again, probe below there, a test below there overnight, rejected, and on the minor time frame we're printing back up above the point of control. Look at the New York breadth chart here, breadth indicators through Thursday. We look at the bottom two indicators. These two indicators make up the breadth section of the pulse chart that we'll look at in a moment. The net new highest 25 indicator in the middle here, 5-day moving average in black. If that's above 0, that's a positive for the breadth indicator. Just slightly dip below there, and you can also see here this indicator at the bottom, percentage of stocks in my New York list that needs to be above its 50-day moving average, almost at 50. So on the pulse chart we have a neutral reading here for breadth in the middle. Price momentum has been increasing and has gone positive 8 days ago, above 0 by this criteria, indicating trend up on the daily time frame. Sentiment indicators, as we know, a few weeks back as the market made its high at this point, early March, we saw a lot of the indicators peaking, like the Ridex, or my version of the Ridex assets ratio just got above 14 for only the second time in the database. Still pretty elevated, but off from that high. We saw quite a sharp fall on Wednesday as assets in the Ridex bull funds fell by about 14% that day, so currently the ratio back below 11. Here's the bull funds in isolation, hit a multi-month peak just a few days ago. As I mentioned, off sharply in the middle of this week. Bear fund assets in isolation remain at an extremely low level, indicating a real lack of bears amongst the retail traders, which is obviously concerning. Retail investors in the AAII public poll, we saw the bulls percent this week almost unchanged at 38.1%. That's a 10-week high. Bears percent was lower at 29.9, a 12-week low. Should we take the net of that figure, bulls minus bears, we get 8.2, that's a 16-week high. So unsurprisingly, as the market, the S&P approaches the highs from early in the year, seeing the bullish sentiment picking up. Nothing extreme in these numbers at all. And the Investors Intelligence poll, Newsletters poll, in the comment here I've said that 5 weeks ago here, bulls percent fell just under 50%, that was a 20-week low. Remembering that was down from 63.1% 9 weeks ago up here at the top, which was actually the highest bulls percent since 1987. So we had an extreme bullish reading up here, came off for a few weeks. Bulls percent fell to a 20-week low just under 50%. Over here we've rallied back, currently bulls percent 58.5. Lipper US fund flows reported equity fund including ETF outflows this week of 3.7 billion. 4-week number actually lost a larger negative number 4 weeks ago, so this black line here, the 4-week flow, is higher and back above 0, but all pretty much in neutral territory here. Let's look at some current charts. This is the spider. You can see the range here that the market has been over the last 10 days. Looking to see if the spider can break out here and retest this high, the February high. Price back below 236.18, which is the 3-month point of control, would put this chart into a weak price location and suggest further weakness. More important level, a 16-month point of control on the Russell 2000 ETF IWM is at 136 here. Price back underneath here, again a negative indication. As we've mentioned over the previous weeks, the DAX chart, the German index, relatively a strong leading chart, and confirmed this week. Looks like a strong end to this week. UK's FTSE 100 chart still struggling with this level. 72.95 is the 5-month point of control. Resistance here in April. If you see the FTSE back above that level, it would be a big positive, but currently I'm calling this a weak chart. This is weak price location, currently below that level. As we know from the pre-open each day, on the TLT chart, the T-Bond ETF, the 8-month at 121.63 is the level to watch. This week we've dipped below that level, last couple of days. Previously been resistance here. Would have expected, if bonds are ready to push higher, that we would have seen a higher low at that point, but we have actually dipped below it, so in the short term at least, this is actually a positive for equities. It's a slightly weaker price location for TLT. As I've been saying now for a good few weeks, this chart is a worry. USO, the oil fund ETF, major point of control migrated to this red level here, 1144, and then we've spent a good part of March printing below that. We had a bounce from the halfway point here and back up towards that point of control, but we've turned lower and now actually printing back in a weak price location below that halfway point. So this chart in the longer term, to me, undoubtedly a worry for equities. Oil in a weak position like this, usually a risk-off indication. Has a lot of room here to rally, if that's what it's going to do, back to that point of control. That would be interesting to see what happens there. Currently, right now, we're in a weak location on this chart. Gold as well has moved into a weaker price location here. This is GLD, the gold ETF, the major at 119.84. Previously resistance at this point and here. I thought it was a good possibility that we'd see support from this point, but actually GLD has broken below that and also below the halfway point of this high. Puts the chart in a weaker price location. Had a poor week. You would expect to see the dollar here on the last two charts looking really strong, wouldn't you? Well, I'm not seeing that. This is the dollar index. At the start of the year we had a target up around 103, 104 for the major distribution. We've come off there. We built a 6-month at 101 in here, and that was built in this point here. Dipped below it, came back and just probed up into that, which was rejected. It's a weak looking chart. Index currently very close or at its low for this move. So correspondingly we're seeing the Euro FX with strength here. Again, like a mirror image of the dollar index, we had a test down into its support here, the 7-month, and a rally from there up to its highest level today, actually since November. And as we know, the pound dollar chart has been rallying again to its high, close to its high today actually since back in October. Just kept the halfway point from this high to this low, which comes in on this dotted line. We saw like a double bottom here, a higher low at that point, and little consolidation back above its 15-month here, and then we spiked higher. This will be an interesting chart to follow. This is the dollar yen chart, which has actually rallied back. We're approaching first level resistance, the 4-month here at 113.61, and the halfway point off that high to that low comes in very close to that level. So that's a band of resistance. Daily price also is getting a little overbought at this point as well. And as I said in the pre-open, as long as the chart remains below that 4-month, it's in a weak price location. So the last 3 charts don't see any, last 4 charts don't see any strength apparent yet for the dollar, and yet we also see gold and oil in weak price locations. It's interesting. As I said earlier, first minor indication of weakness would be the E-mini printing below 23.85. That would be a level to watch early next week. And in the longer term, as long as the E-mini holds above 23.53, which is the next level of support, the 3-month point of control, it remains in a strong price location. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.